Warm welcome here from us at Prime XPT, from the Prime XPT Trading Academy to everybody out there watching. Welcome to our very first episode of That Crypto Show, the show every Tuesday, every Wednesday, every Thursday, where we are going here at the Trading Academy take some sweet times to talk with you guys about our favorite topic, your favorite topic, cryptocurrencies, trading, and the financial markets. So part of the show is going to be that we talk about what is currently going on that particular day on the markets, that we help you to tilt your head into the right direction, look for the right things to trade, look for what is really important on that day so you can make better informed trading decisions. My name is Dirk Hartig. I have not only the pleasure of being your host today on this show, I'm also the head of trading education at Prime XPT. And I've been a trader, I just noticed this morning, for 23 years now myself. Many of those years I've been trading for institutional investors. The last 3 years I've been trading for my own account finally. And my aim is to show you a little bit the differences of what a professional investor, what a institutional investor is doing different from a retail investors. And this, I'm very sure, will help you to avoid all the traps that are out there that on a daily basis can make us stumble on our way to becoming a successful trader. If you're not doing so already, please take the opportunity also to follow us on Twitter at px_academy. We post updates on the crypto markets there almost every day. So there's almost every day something interesting going on, which we are going to show. And we are very happy if you want to follow us there and if you also want to comment. Because by the end of the day, the aim of this show is also that you participate in it and that we cover things that are relevant for you guys. And you can ask us questions at any time, either by writing into the chat. So you can write direct into the YouTube chat if you're watching currently on YouTube, or in the Twitch TV chat if you have joined us today or in the future by Twitch TV. Or if you prefer, so you can, of course, also drop us an email under academy@primexpt.com. And I'll promise you we'll answer every single email coming in. And who knows, if your topic is very relevant also for other traders out there, we might focus on it in one of our next upcoming shows. So don't be shy and share your thoughts with us and share your questions with us. As you can see behind me, we currently have a special offer here in our first show. We are giving out a 50% deposit bonus for everybody watching here with the promo code Trading Academy. And to claim this code, it's really very easy. You just need to go into your account. You go here up in the margin section to account, and you find this field here, and you just punch in Trading Academy. Activate the code, and then you'll get a 50% deposit bonus on every deposit you make until October 12th. And as you can see down here, guys, I activated my bonus already yesterday because, that's really a good offer. It's basically free margin, so why not use it? Great. Before we get started, we have to talk a little bit about risk, obviously. So we are all experts here, and everything we research is done in a very good fashion and in a very diligent fashion. And everything I'm showing you here, guys, is very much also my own trading setup. So a lot of the ideas I'm presenting here, I'm trading myself also. But it's very important that you don't take this as financial advice. Every trader out there, every investor is different. So you have to do your own due diligence. I'll make an example. If you are a scalper and you like to ride the 1-minute charts up and down and do so hundreds of times a day, you probably have a different approach to the market as an investor that takes position for days, weeks, or months. And those two trading styles are not really that compatible. So don't just blindly follow. take this show as an idea of education for you so you are better in making your own informed decisions. Great. All right, before we jump into looking at what we want to focus on today, which is going to be the upcoming squeeze and volatility, I want to talk in general a little bit about how do I approach as a daily practice the crypto markets, especially Bitcoin. And I'm going to focus here on Bitcoin very much because Bitcoin is still the cryptocurrency out there influencing everything else. If Bitcoin goes up by a great margin or down by a great margin, it's very hard to find any other relevant cryptocurrency in the top 20, in the top 30 that is going into the different direction, with the exception sometimes, of course, of Ethereum, which has I like that very much, has developed a life of its own in the past months, really. So I always start my day by getting a general idea of what the current sentiment of Bitcoin at the moment is. And a great resource for doing so is the so-called Fear and Greed Index. And you can find this actually updated daily also on Twitter. So when you are following us on Twitter under px_academy, why not also have a look at a Bitcoin Fear updated daily? And these guys, they measure the sentiment for Bitcoin. Now, what is a sentiment? A sentiment is, in a nutshell, nothing else than what is the current feeling of the general audience towards an asset, of the general trader. And this can go from extreme fear to extreme greed, which would be here in the opposite direction. And this is a metric that is very, very important for our trading decisions. Because if we are in a situation where we have extreme fear in everything crypto or Bitcoin related at the moment, that means that the market is going to have higher downswings, or the downswings are going to be more volatile than the upswings are going to be. And I think you can see that very well, for example, really actually in the last quarter already. Look at those candles here, the red candles. On average, they are larger than the green candles. So every time there was bad news coming out or whatever it was, we saw quite significant downswings in Bitcoin, or in general in the whole crypto market. And this is very important to keep in the back of your head. That doesn't tell you anything about, okay, how should I position myself at the moment? But let's say you're a day trader. Let's say you look at 5-minute charts or 50-minute charts, or you look maybe at hourly charts. You will then have an indication that your risk is probably going to be on the downside. I have an hourly chart now here, for example, and if I zoom out a little bit, you can see the pressure always is on the downside. So the swings down are always much, much higher, or much more volatile, much faster than after this climbing up again. And you have to adapt your trading strategy to that setting. So if you're, for example, day trading here, the smart thing to do would be, every time you get a signal to do a short position, you can feel more confident with it than for a position long. So maybe trade smaller long positions than short positions, for example. Adapt your risk setting, your position size to this a little bit. On the contrary, if this goes to the other side, and we had this in the beginning of the year, so after last year, after we broke through the 20,000 in Bitcoin, and there was all those FOMO about Tesla buying Bitcoin, about Tesla accepting Bitcoin, which then turned, as we all know, into the contrary throughout the way. We had a situation of greed and extreme greed. And there it's really the opposite. The market will take every news as a good news and swing up in an exaggerated way, and bad news are completely ignored or just not relevant for the market. And we can see this really in Bitcoin at the moment as well. Some of you probably have heard the news about Ecuador no, sorry, El Salvador, accepting Bitcoin as a legal tender. So this is really, I mean, this is great news, isn't it? It's a new currency that's for the first time is accepted by a country as a legal tender. You can go to your grocery store now and pay with Bitcoin. And the market really didn't care much about it. And this is very typical for a situation where we have this extreme fear that the market either completely ignores good news, or they are just not resulting in upswings on the market. So, and you can see already just by looking at this, just by looking at something like a fear and greed index, you can already deduct a lot of information from this, how you should position yourself, or on what positions in the market you should probably currently focus. So this is always, when it comes to trading cryptocurrencies, really my first stop in the morning. I look at what sentiment do we have, and this is going to influence my position taking for the day. Then I like to look at a couple of news, and there's not so much going on today. Like a couple of things that popped into my eyes is like there's another Chinese province, Anhui, the sixth Chinese province now to clamp down on Bitcoin mining. So as everybody knows, China is banning crypto mining, and we saw this in the crypto hash rate. The other day we also did something there in our tweet of the day for the Trading Academy, talking about this. So we saw the hash rate dropping, but it's recovering now because everybody that has been doing crypto mining, at least as a significant large operation, is now moving to other places here. A lot of them moving to North America. So, and I must say this news, I mean, when that came out today, was pretty much ignored. So seems like this whole China Bitcoin banning mining thing is not that much of relevant anymore. Two more things that popped into my eye this morning is a little article about Bitcoin whales starting to accumulating after the price dropped to 30,000. And this is shown by data that is directly coming from on-chain analytics. What on-chain analytics are, we are going to cover later, probably going to cover this with a special video from the Trading Academy. This is quite a bit a complicated topic, so the time today doesn't allow us to go in. But in a gist, what this says and what econometrics discovered here are three things. The retail investor, the typical small Bitcoin investor, and that is like everybody that owns maybe 0.1, 0.05 Bitcoins, and so on and so forth, is still selling Bitcoin at these price levels. Whereas the whales, and whales are the guys out there with the big pockets. So people that have been in Bitcoin, have been mining Bitcoin from very early onwards, maybe from 2009 or 2010 onwards already, so that have like thousands of Bitcoins in their pockets, or institutional investors, they are buying around 30,000 at the moment. And I think we could see something like this yesterday as well. Let me go on a lower time frame here in our Bitcoin chart. Yeah, this is something I noticed. So yesterday around, what was that, 11, when we were really approaching this lower area here where I have my support line in my chart, is there was like huge green spike suddenly coming up. And this is usually an indication of somebody buying a lot of coins at one time. So maybe somebody buying like 10, 20, 30,000 coins in one scratch. And of course, this is influencing the market very, very much, at least short term. So the guys that are supposed to know more than the average investors are buying at these levels. And more on the funny side here, and because he's blowing into the same horn, another on-chain analyst, Willy Woo, who I like very much because I think his analysis of really in a neutral way is going on at the moment. Bitcoin is saying he wouldn't be surprised if we see a price surge of Bitcoin to $157,000 short term. And he even goes as high as saying he wouldn't be surprised seeing Bitcoin curve to 250 or 350,000 US dollars. And if you remember our tweet from Friday, where we said like, okay, it's a bit fun thought for the weekend. If Bitcoin wants to follow exactly the same pattern as after the last halving, the halving before 2017, that is, we should see in September prices around, I think it was $268,000. So he's in line with what we actually meant a little bit as a joke, obviously. But he's been right a couple of times. Now, why am I showing you this? Not because I want to stir up some FOMO and say like, oh, we have to buy Bitcoin or we have to buy Bitcoin now. But it fits very well into what I've been observing in Bitcoin for a while now, and I want to show you this. So very simple chart setup I have here. I've drawn in. So after we sprung up to the area here, 64, 65,000 high, and all this FUD, fear, uncertainty, doom, initiated by the tweets of Elon Musk, initiated by China once again, hammering down on crypto mining, hammering down on Bitcoin, because they want to advertise their own digital currency, the digital yuan. Sorry, just need a sip of coffee here. We were coming down. You know, we had this and we still have this sentiment of extreme fear, but we kind of found a bottom. And since really since the 19th of May, we are trading in a range between 30,000 and 40,000. And this range has been gotten more narrow. So I actually think the range at the moment is more between 31,000 and 36,000. And one very good thing to measure something like this are really Bollinger Bands. I'm not a big fan of Bollinger Bands when it comes to trading, but I think Bollinger Bands are good in showing you what is there to expect in terms of volatility. And this is what I mean when I say I'm expecting a volatility squeeze of Bitcoin. So every time we see something like this, that the upper band of the Bollinger Band and the lower band of the Bollinger Band are getting very, very close to each other, you will probably see either of those two scenarios. You will, hold on, let me get my brush here. You either see this, or you might see this. So we are very likely to see a breakout either to the upside, and that would support what we just saw the analyst deducting from the on-chain metrics, or we're going to see a breakout to the lower side. This would, by the way, support what JP Morgan just said a couple of days ago. They see the fair value of Bitcoin at 23,000, if I'm not mistaken, at the moment. Now, is it important for us as traders if we see a breakout to the upside or to the downside? Not really, in my opinion. Because as traders, we are looking for a certain amount of volatility. We are looking for a setup that gives us a high chance of having an edge in our position when it comes to risk management, where we can gain more from the position than we have to risk for the position. And I want to show you this with another indicator. Hold on a second. Bollinger Bands width, yeah. So this is really just down here measuring the width of those two lines, the upper band and the lower band of a Bollinger Band. And you can see here, if I zoom back a little bit, it's not that often that we reach like something so low here. Ignore a bit what you see here on the chart, because Bitcoin has been rising so much there, so it looks more narrow than it really was there. And will probably look different, by the way, if I do a logarithmic chart. Yeah, absolutely. But for now, let's not do that. And so, how would we play something like this? In my opinion, we really have like two options here. We don't know when this volatility breakout is going to happen. Could be today, but we still could move on for days and weeks sideways without not much action. And an indication that we have this breakout always is if you see something like you see up here. Like here, the Bollinger Bands. This is not a good example here, just to illustrate it a little bit. Suddenly going like this. This means the volatility squeeze is happening. In this case, it was happening to the downside, but the bands here were not very narrow. And for us here, it really doesn't matter that much if it's going to the upside, if it's going to the downside. Yeah, if you are sitting on a large amount of Bitcoin that you maybe have accumulated over the course of the last years, of course you wish it's going to break to the upside. So do I. But from a trader's perspective, it really doesn't matter. What matters for us really is, or what matters for me is, how would I play this whole thing? And I could do two things in my opinion here. I could continue to play this range, or the two ranges, so the lower two support zones and the upper two resistance zones here. So I could always place limit orders, for example, here and here, and then hope when it reaches down here, it's going to pull back again and run into the area of 36,000 again. And on the other side, also, I could try to sell Bitcoin up here at 36,000 in the hopes that it goes down again into the area of 31,000. And in this case, I just need to place a stop loss like slightly under the support or the resistance zone there. So that's a very valid trade with what I could play the sideways range. But if the breakout really is coming, and those breakouts usually happen soon, we need a catalyst for it to happen. So this is probably going to be some sort of news event, maybe a positive news event. I'm just making things up now. The Fed is stopping to print dollars, is going to buy Bitcoin instead. It's not going to happen, guys. I'm just making things up here. And maybe on the downside, Elon Musk saying, okay, he wants to destroy Bitcoin or whatever. And every fanboy is going to believe that, of course. And so probably some news, either positive or negative, that's going to be the catalyst of the squeeze really playing out. And when it's happening, it's going to happen fast. So we're going to have a lot of momentum going either up or a lot of momentum going down. And I would, for example, play this by working in this case with stop buy and stop sell orders. So a stop buy order in this case, meaning if we, for example, with enough dynamic break through the area here at 40,000, then I'm going to buy here and I'm going to place my stop loss here in the hopes that the dynamic lifts us more up into the reach of 50,000, maybe even to the all-time high around 64,000. Or I could also do this on the downside here, saying like, okay, if we break with enough dynamic below 30,000, below 29,000, it is actually, I would do a stop sell here. Stop sell meaning once the price has reached this level, then I want to short, then I want to sell. This order type is a little bit counterintuitive very often, I know that. But for scenarios like this, it works very well, because I think Bitcoin is going to slump further down than into the areas of 20, 22,000, maybe even lower. Who knows? So what I want to illustrate with this really is, as a trader, for me personally, very often there are scenarios where it doesn't really matter for me. Are we going up or are we going down? But I will have my game ready for both scenarios. I have my game prepared for the scenario that we are continuing sideways. I have my game prepared for a scenario where we see a volatility squeeze upwards, like the Willy Woo and the coin metric economics are expecting. And I have my trading scenario prepared if we are going downwards with a lot of dynamics, like, for example, JP Morgan is expecting. And the beauty really of this is a question I always hear is, okay, Dirk, I don't have time to sit in front of my laptop and computer for 10, 12, or 14 hours like you do. Yeah, you don't need to be crazy like me. You don't need to ruin your body sitting in front of your laptop for 14 or 50 hours every day like I do. Only crazy people, by the way, would do that. And most of you guys, most of us, of course, have a job they have to attend to every day. So you're probably going to leave the house in the morning, go to attend the job, and um, that is okay, because on the platform you can pre-prepare your trade, you can place your trade that cover all those different scenarios. I've, for example, just shown you. If you agree with me on this, like I said before, please do your own due diligence. I, by all means, I'm not going to tell you something like, oh, I'm right every time. I'm not, of course not. This is part of trading. Being wrong is a big part of trading, but you need to be prepared. You need to have your exit strategy for sure. And so you can pre-prepare those trades. You can close your laptop. You can go to work, and then in the evening when you come home, you see if they've played out like the way you wanted, or maybe if your stop loss has been hit, or maybe even nothing happened because there was nothing going on the market. And hey, that's beautiful, isn't it? If there's nothing going on the market, if it's like a boring sideways line, you didn't spend 15 hours in front of your laptop trying to profit off that, which is very hard and almost impossible. So you didn't waste your time. You did something useful while you were still at your order, while you still had your orders in place to participate of market swings. All right. Now, I've talked a lot already, and I think that's all we have time for today. One last thing I would like to point out, because I think it's something that's probably going to be very important also for the crypto markets in the future, is we had inflation rate, the US inflation rate, coming out 2 days ago on the 13th of July. And the expectation was already quite high with 4.9%, but it really was at 5.4%. And guys, imagine what that means. Like in general, every commodity that's going into this index has been rising by 5.4% during the pandemic in the last year. So everybody living in America has 5.4% less money than they had a year ago. And this is, I remember a couple of months ago, the Fed Powell saying like, okay, we expect inflation to rise, but it's just going to be transitory. And if I look at this right now, I find it very hard to believe that it's going to be transitory. And this might be one of those things that's going to become very important to look at in the future, also for cryptocurrencies. So have an eye on that as well. In one of the next shows, I'm going more into detail in these numbers and what they, for example, also mean if you want to trade something like euro dollar. For now, exciting times coming up. Maybe even the next day is already going to be very exciting. I think really this is a break or make moment for Bitcoin that's going to define the rest of the year, or maybe even the next 2 or 3 years, and will determine, are we really already in a bear market again? Was the 65,000 the top already, which also would destroy models like stock to flow, which we're also going to cover later on. Don't worry about it. And or are we going to see Bitcoin rising again to the all-time heights by all caused by this volatility squeeze? So very exciting. Be prepared out there, stay safe, and see you next Tuesday. Goodbye.